You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Trying to stay ahead in global finance and policy right now, it feels like drinking from a fire hose, doesn't it? So much information, so much noise.
It really is overwhelming.
We've just waded through a pretty hefty stack of sources, detailed briefings covering FX, commodities, trade, even missile deployments. And our job here is to cut straight through that clutter for you.
Exactly.
We want to give you that strategic edge, pulling out the real nuggets of intelligence, the stuff that actually moves markets and shapes decisions.
Yeah, not just listing facts, but finding the surprising bits, the contradictions. That's where the insight often lies.
So we're diving deep into the global pulse right now.
Right. And we've structured it logically. We'll kick off with some surprising market standouts, FX and commodities.
Okay.
Then we'll pivot to those crucial policy and trade talks, especially U.S.-China.
Got it.
And wrap up by looking at the geopolitical hotspots, trying to connect the dots on why all these details actually matter for your risk outlook.
Perfect. Okay, let's get into it. The global economy's scorecard. Starting with currencies, foreign exchange. The general theme is, yes, a firmer U.S. dollar. But looking at the G10, those top 10 traded currencies, one really jumped out, didn't it? It bucked the trend.
It absolutely did. That was the Australian dollar, the AUD, shot right to the top of the G10 leaderboard.
Ah.
And what's really interesting here is how directly local economic data can just propel a currency like that. It wasn't about commodities this time.
It was inflation, right? Break that down for us, because you hear CPI, RBA, it can sound like alphabet soup.
Totally. So Australia released its Q3 Consumer Price Index, that's CPI, basically their inflation reading, and it came in hotter than anyone expected.
Okay, hotter inflation.
Exactly. And when inflation runs hot like that, traders immediately think, okay, the Reserve Bank of Australia, the RBA, they're probably not cutting interest rates anytime soon.
Right. Maybe even hiking again.
That's the possibility it raises. So if rates are likely to stay higher or even go up, holding that currency becomes more attractive. So the AUD surged. Even with the dollar generally strong elsewhere, it was purely about that domestic data point.
So it's like traders are doing instant math on interest rate expectations. Meanwhile, other big currencies felt the pressure.
Yeah, sterling, the British pound, was under a bit of strain. Those UK fiscal worries just seem to linger, don't they?
They really do.
And the yen, well, the yen did its usual dance. Dipped under that 152 level against the dollar for a moment.
That 152 always feels like a big psychological line.
It really does. Then it bounced back.
Right.
And over in China, the PBOC, their central bank, seems focused on stability.
How so?
They set another stronger than expected fix for the yuan against the dollar, around 7.0843. So like signals saying, we're managing this, we don't want excessive weakness. It's a political message too.
Got it. Okay, shifting to commodities. And here's where we hit one of those contradictions you mentioned. This is interesting. Crude oil. That actually fell back, gave up its earlier gains.
Right.
Despite reports, private estimates anyway, showing inventory draws across the board, crude, distillates, gasoline. That feels backwards. Why ignore bullish data?
Yeah, this is a classic case of the big picture overwhelming the small picture. Macro risk trumping micro fundamentals.
So fear, basically.
Pretty much. The market is laser focused on two things right now.
Yeah.
Worries about a potential global economic slowdown hurting demand, and, ongoing supply headlines linked to geopolitics.
Okay.
Those fears are just outweighing the fact that, yes, inventories apparently dropped last week. Traders are betting a slowing economy will slash demand faster than supplies tighten.
That broader fear factor, it's putting a lid on other things too, isn't it? Like gold.
Definitely. Gold is bumping its head against that USD 4,000 ounce level.
Yeah.
Just can't seem to break through convincingly ahead of the big Fed meeting, the FOMC.
Right. Fed decision looming.
And that 4,000 level, it just keeps attracting sellers, people taking profits as those real interest rate expectations bounce around.
But copper, you noted, found some buyers.
It did, yeah. Copper got a bit of a bid, especially as Europe opened up. It partly reflects maybe a slightly better risk mood, but also, crucially, that trade chatter.
Ah, the U.S.-China angle again?
Exactly. Talk about flows in agriculture, maybe tech, things that hint at, well, maybe a bit of de-escalation. And that leads us perfectly into our next topic.
Okay, good segue. So copper hints at trade talks warming up. Let's unpack that policy side. Tariffs, trade, lots of small but maybe symbolically important moves happening.
For sure. It feels like a lot of careful maneuvering. The absolute core negotiation piece right now seems to be around fentanyl.
How so?
Well, the talk is about Washington potentially cutting those 20% tariffs linked to fentanyl precursors the chemicals used to make it, cutting them in half, maybe?
Okay, that sounds significant.
It is, but there's a big if. It's leverage. This potential cut is reportedly tied directly to successful talks between the leaders and then actual follow-through on enforcement.
So it's a carrot tied to a huge domestic issue for the U.S.
Precisely. And we're already seeing some, let's call them goodwill gestures ahead of any big meetings.
Like the soybean purchases.
Exactly. China's state-owned food company, COFCO, bought 3 big cargoes of U.S. soybeans. That's about 180,000 tons. It's a tangible agricultural purchase. Sends a signal.
Reduces that friction point a bit.
And don't overlook the small stuff. They apparently agreed to cut port fees for each other's ships.
Okay, that sounds minor, but I guess it adds up.
It's not billions, no, but it lowers the day-to-day cost of trade. It's another practical sign of wanting to, lower the temperature.
But wait, if they're buying U.S. beans and cutting fees, why are they also signing new trade deals elsewhere, like that China-ASEAN upgrade, the FTA 3.0? Isn't that hedging their bets, diversifying away?
It's both. And that's kind of the whole game right now, isn't it?
Yeah, seems like it.
They're definitely building stronger regional ties with partners through deals like that FTA upgrade. But at the same time, they're using targeted things like soybeans and fee cuts to manage the relationship with the U.S.
Managed competition in action.
That's the term, yeah.
What about the tech side? That's always so sensitive.
Extremely. So U.S. officials are expected to talk about the rules for semiconductor exports.
Right.
The contours, as they say. But the immediate focus, from what we're gathering, isn't about outright bans on everything new. It's more about parsing the language.
Sure.
Looking at NVIDIA's next-gen stuff, for example, and figuring out the compliance pathways.
So finding ways things can be sold legally within the rules, not just blocking everything.
Kind of. It's a very detailed, almost bureaucratic process of understanding the lines rather than just drawing a giant red one immediately. Nuance is key here.
Okay, shifting continents slightly, but still on trade and strategy. The Americas. Brazil seems to be part of this picture, too.
Absolutely. Quietly crucial, maybe. The U.S. Senate took steps to end those Trump-era steel and aluminum tariffs against Brazil.
And that connects to
critical minerals.
Yeah.
That whole global push to secure supply chains for things like rare earths. U.S. diplomats have apparently been talking to Brazilian mining companies specifically about rare earths.
Ah, so it's part of diversifying away from dependence on other sources.
Clearly, it shows the strategic economic planning goes way beyond just the U.S.-China dynamic. It's about building alternative, maybe more reliable supply chains.
And we're seeing other partnerships solidified, too. U.S.-Korea.
Yeah, they're talking about finalizing a bilateral trade package soon, alongside boosting security cooperation. That security piece is becoming inseparable from trade, it seems.
Which brings us right back to the bigger picture.
Yeah.
Geopolitics. It's like this constant background hum or sometimes a roar affecting everything we've just talked about.
It really is. That risk layer is always active, shaping commodity prices, currency flows, everything.
So let's look at the flashpoints. Middle East first. We saw Israeli strikes in Gaza City, but also Hamas denying involvement in another incident in Rafah and saying they're still committed to a ceasefire framework. How are officials reading this?
Well, the key signal, at least from the U.S. perspective reflected in the source material, is an expectation that the broader peace framework will likely hold, despite these flare-ups.
So contained skirmishes, not necessarily a full escalation.
That seems to be the baseline expectation for now, which is important for markets, of course. Less volatility than feared, maybe.
Okay. Then Northeast Asia. That shadow is still there.
Very much so. North Korea fired another missile. And they specifically framed it as part of their nuclear forces exercise, not just a routine test. That's a deliberate signal.
And the Pyongyang-Moscow link continues to worry people.
Yeah, that strategic alignment arms, political backing, whatever it involves, it just continues to cast a shadow over the whole region's risk calculation. Forces Japan, South Korea, the U.S. to constantly adjust.
But there are efforts to manage tensions too, right? Like India and China?
Yes, high-altitude diplomacy, literally. Beijing and New Delhi held border talks, focusing on that tense western section. The agreement. Keep talking. Keep military and diplomatic channels open.
Manage tension, trying to avoid accidental conflict.
Exactly. Between two nuclear powers, that's crucial. And speaking of specific data points,
Yeah,
Europe
that's happening there.
will get a very specific piece of information. Belarus has flagged it plans to deploy its new Oreshnik missile system in December.
Oreshnik. Okay, why does that matter?
It's not just talk. It's a tangible new element in the region's security posture. Something NATO planners, particularly on the eastern flank, have to factor into their deterrence calculations right now. A specific new capability appearing.
And finally, wrapping up the security side, the U.S. reiterated its view on Japan's neighborhood.
Yeah, using the word severe to describe the security environment around Japan, and really emphasizing the U.S.-Japan alliance as key to deterring Chinese military pressure, thinking about Taiwan, the South China Sea, all of it.
Okay, wow. So we've covered a lot of ground, complex market reactions, specific trade moves, very real security developments. Bringing it all together, what does this mean for you, the listener, looking ahead, say, over the next few days or week? What needs to be top of mind?
Okay, yeah, boiling it down based on this deep dive, I think there are three main areas demanding your attention right now.
All right, what are they?
First, policy signals. Keep a very close eye on decisions coming from the Fed, the FOMC, and the Bank of Canada, the BOEC. Their rate decisions ripple out globally, affecting the dollar, the AUD, everything.
Right, key central bank meetings. Number two.
Concrete deliverables, especially from that U.S.-China conversation. We need to see if there's actual movement on those fentanyl tariffs, confirmation of the farm buys like soybeans, locking in the shipping fee cuts, and clarity on those tech rules.
Substance, not just talk.
Exactly. Need to see if the gestures turn into something solid.
And the third area.
Geopolitics. Just stay alert for any fresh headlines. Anything that could suddenly shift the balance for energy or metals markets, that's the wild card, especially with oil being so sensitive to those macro fears we talked about.
So, quick recap of today's snapshot then. FX driven by that strong Aussie dollar and a generally firm U.S. dollar. Gold stuck below 4,000. Oil finding it hard to rally even with good inventory news.
That captures it pretty well. And, you know, this raises a really interesting question, something to chew on.
Oh, yeah. What's that?
Well, we're seeing this pattern, right? Global powers seem to be simultaneously ramping up military deterrence, think Belarus, with the Oreshnik system, the U.S. warnings about Japan's security environment.
Okay, yeah, the hard power posturing.
Right. But at the same time, they're actively looking for these small ways to reduce friction, these little micro-detentes, spying soybeans, cutting port fees.
Aggressive security stance, but trying to smooth over minor trade irritants.
Exactly. So the question for you is this the new normal? Is this pattern the operational definition of managed competition here in the 21st century?
Military readiness combined with, like, targeted economic defrictioning.
Yeah. Is that the playbook now? Something to definitely mull over as you process all these different, sometimes contradictory pieces moving on the global chessboard.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.